Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, December the 15th. Well, Wall Street indexes are higher so far today with gains in consumer stocks like Costco Wholesale helping a broad recovery. Costco rose 4% after the retailer reported upbeat results and pushed up the S&P Consumer Staples Index by 0.9%. The index was the biggest gainer among the 11 major S&P sectors. Stocks have rallied this year partly on the back of hopes of a corporate tax cut bill in play in Washington right now. It is also quadruple witching today, and the market will probably see a rise in trading volume as traders close hedging positions of futures, options, and stocks or roll them over at the last minute. So with that in mind, let's go on to our charts and maybe get some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. As you all know, the SPY is the tracking stock for our S&P 500 benchmark index. Now, we had a new all-time closing high on the SPY this past Wednesday at $266.78. Right now, when I captured the SPY, it was trading at $266.54, just below that. As you can see, the 20-day moving average, the red line on this screen, is right now at $263.18, and the SPY is trading at quite a premium to the 20-day moving average and to the green line, the 50-day moving average, and to the black line, of course, the 200-day moving average. Now we've got a beautiful uptrend going here. There's absolutely nothing that we can complain about. The 20-day moving average is drawing a pretty nice trend line for us. We can see here, however, that the RSI, the 14-day RSI, is up right at the 70 line. When the RSI, or the Relative Strength Index, moves up to the 70 line on its scale, that means that whatever asset it's tracking is in an overbought condition. An overbought condition meaning a lot of people are long it and very few people are short it. So that's one thing just to keep in mind. It's not a big negative. It's a very mild negative. As you can see, the SPY has stayed in this overbought zone near or at 70 now practically since October for the last 3 months. So how long it can maintain? Well, as you know, it can maintain as long as it likes. The market always fails, never fails to amaze me. So with that, we see here that possibly the SPY could break out next week, move over 267, maybe break out to the high side, especially if this tax bill goes through, or possibly it needs to take a rest, and if it does so, again, it has support at the 20-day at about $23 and change, more potential support at the 50-day moving average at about $259, more support here down about 256, and so forth. So we do have quite a bit of volume coming in here in the month of December. There's a lot of reasons for that. A lot of portfolio managers start window dressing now, purchasing different stocks to put in their portfolio. Again, we have the corporate tax cut bill going on. So a lot going on right now. We'll see if this volume can maintain into next week, again, push the market higher, or if for some reason we need to take a break. But right now, there's nothing to argue with. It's all looking very, very positive. Our next chart today, however, is a little different pattern. This is the iShares Russell 2000 ETF, symbol IWM. As you all know, the Russell 2000 is the small cap index, and we watch the IWM because it has the ability to act as kind of a leading indicator for the broader market. These are small caps valued at between about $300 million to $2 billion. And again, it has a different pattern than the SPY does here. and we want to keep an eye on it. Now, when I captured this chart today, the IWM was trading at $151.63. It made an all-time closing high on November 30th, right back here, of $153.65, although it did manage to move up higher in an intraday move later in November, or earlier in December, I should say. But then it's come back down to its 50-day moving average, and it's been consolidating now for a little over a week. So obviously the IWM is deciding, do I have the strength? Do I have the support to move higher here? Do I have the momentum to move higher? The SPY does, but do I have the momentum to move higher? Or do I start down and break the 50-day moving average, which is coming in at $149.63 right now? Of course, this trend line's coming in at the same place, so that offers more potential support and key support should the IWM decide to roll over. It moved down yesterday to the 50-day moving average, but the more news we get on the corporate tax bill that's positive, the more that pushes the market back up, as it did today. So I'm going to keep an eye on the IWM in the coming week, as I usually do. If it moves higher, then that will be positive for the broad market. If it moves lower, then it could pressure the broad market lower as well. Our final chart today is a chart of the S&P Aerospace and Defense ETF, the XAR. The XAR has 35 holdings, and the top components are Boeing, Orbital ATK, Teledyne Technologies, Northrop Grumman, and United Technologies. Now, the XAR made an all-time closing high back here on November the 2nd at 82.80. Since then, it rolled down to below its 50-day moving average, then jumped back up and is now walking along the green line, the 50-day simple moving average on my screen. Today, the 20-day moving average is coming back up to cross above the 50-day. It looks like it might do that today, which is a positive. And the XAR is actually trading is breaking out over above these prior highs. So if it can do that and continue in the coming week, if the XAR can move up over 83, I'm going to be keeping an eye on it and may possibly purchase shares of the XAR. Now, as usual, my initial stop is a close below the 50-day, the green line, the 50-day moving average. Again, that's coming in today at $81.45. So if it breaks out, I may buy a few shares, put a stop in just below the 50-day moving average, or exit the trade on a close below that line. Otherwise, if the XAR can continue to move higher here, it may be something we want to keep an eye on. Its RSI is moving higher here. The MACD, of course, is just above the zero line, kind of neutral but positive. That's a good thing. So keeping an eye on the XAR into this coming week for a possible breakout. Now let's go on to this week's economic reports. But first, please join us this coming Monday, December 18th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I give you stocks and ETFs that may become right for high potential trades. And please know I also give you the entry prices, protective stop prices, and profit target prices. So we give you a complete trading plan for our recommendations in Toni's Market Club. If you can't attend our live session, not a problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. For economic reports this coming week, Monday, not much going on. Tuesday, we have housing starts and building permits. Wednesday, we have existing home sales and crude inventories. Thursday, we have the GDP, jobless claims, Philly Fed Manufacturing Index, and our usual natural gas inventories. On Friday, we have durable orders, PCE prices, Michigan sentiment, and new home sales. Excuse me. Again, join us for Tony's Market Club this coming Monday. Please don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.